One of the huge keys to being a successful real estate investor is being able to find funding for your deals. And as this market and financial times are changing, money is getting harder and harder to find. Banks are tightening up on lending practices and interest rates are higher and the market is slowing down. So if you're struggling to figure out ways to find the money you need to invest in this market, stick with me because that's exactly what I'm going to show you. Hey everybody, it's Henry Washington and welcome to the On the Market YouTube channel presented by Fundrise. If you've been following along with me over this journey, I have been trying to teach you different ways and methods that you can actually still invest even in today's market conditions. If you want to learn more about those methods, please check out the link in the description and go check out those videos. All right, so now that you have your strategy that you're going to use to start building wealth even in these current market conditions, you've now got to find the money to be able to buy those deals. And it could be a little intimidating looking for money right now because real estate, as we know, is cyclical. We just came out of a market where it was hard to find deals, but it was easy to find money. They were printing it. They were putting it everywhere. Everybody had access to different funding. And now things have started to shift a little bit where it's a little easier to find the deals, but getting access to funds is more difficult because interest rates are higher and banks are tightening up on what they're willing to lend. And so if you want to learn how to get access to that funding, that's what we're here for. We're going to talk about one of my favorite strategies, and it's called leveraging lines of credit. The very first rental property I ever bought was a single family home that we were going to use as a rental. And I bought it well, meaning I paid about $115,000 for it, but it was worth about $150,000 to $155,000. So there was equity in that deal. And luckily I was working with a bank who was proactive about getting business. And so they saw that equity and they called me and they said, hey, would you be interested in taking out a home equity line of credit against that equity you have in the house? Will give you access to about 75% of that equity on a line of credit. And to me, that was mind-blowing at the time. I didn't know that was something that I could do. And so I was able to then leverage the equity in the house I bought, get access to funds, and I could take that funds and use it to go invest in other real estate deals. So if you borrow $20,000 off of your line of credit at 6% interest, that puts your money owed, your interest owed at $1,200. Now that's an annual number. So to get your monthly payment on that interest, you have to divide that $1,200 by 12. That gives you $100 a month. You will be paying $100 a month while you have that money out. So the caveat to this is if you want to pay off that principal balance, you have to do it yourself. They're only going to require you to pay your interest only payments. And so basically your minimum payment is $100. What that means is when you borrow from your line of credit, you have to be very careful because you want to make sure that you're buying an asset that you know you're going to get your value back out of, either by refinancing it and pulling your money out later, or by selling it if you're going to flip it and sell it for a profit. That's why I love the HELOC as a strategy, because I don't actually have to pay anything for the money until I actually use it, which allows me to stack up lines of credit in the event that I need them. And right now, you're going to find in this market that deals are going to start to pop up left and right. There's going to be more access to deals than you're probably accustomed to if you've been looking in the past 3 to 4 years for real estate. But access to that money is going to be harder to find. And so if you've got some properties already, maybe it's your personal home, maybe it's another investment property, you can start getting access to lines of credit that you just can build up and you don't actually have to use them unless you need them. Now, there are also unsecured lines of credit, and these are just lines of credit that the banks give you based on your credit score, your credit history, and your relationship with them. Not a lot of people know about unsecured lines of credit, and even the ones that do, they don't often leverage them. Think about this. They are not going to be as large as maybe a secured line of credit because, again, they're not backed by anything but you. But many banks offer them, and many banks are still offering them even in these economic conditions. A lot of them aren't just going to advertise that they'll give you access to some money. You have to call and ask. But it works in the same way as the secured lines of credit. You go and you call a bank and you ask them if they do unsecured lines of credit. They'll typically have an application. You fill out the application and then they'll give you access to some money. It could be $5,000, $10,000, $15,000. I've seen them as high as like $25,000. And I've seen them as low as about $5,000. But that's money that you then have access to that you don't have to pay anything for unless you use it. The best banks to do these things at are small local banks. Small local banks are a little more flexible with the types of products that they offer than a larger bank. Larger banks do offer lines of credit on HELOCs and on unsecured, but it's going to be harder to get those, I believe, at a larger bank. But these small local banks, they have them, and a lot of them might not do unsecured lines of credit. You'll just have to ask, or a lot of them might not be willing to do it until you've established some sort of relationship with them. And so I would say the best place to start looking for lines of credit, especially unsecured, are with banks you currently have a banking relationship with. When you're thinking about secured lines of credit or HELOCs, another thing to keep in mind is you don't have to get a home equity line of credit with the same lender you got your first mortgage with. If your first mortgage is with Bank of America, you don't have to get a line of credit with Bank of America. You can go get a line of credit with the small local bank in your backyard, and they will take out a second mortgage on that property. A lot of people feel like you have to be restricted to that exact same bank. You don't. You can go to any bank that offers that service to get a line of credit on your property. And so do your shopping around. Don't just take the first bank you talk to's word for it. If they say we don't do lines of credit, that's not a thing. That just means they don't, but another bank may. So don't just take the first bank's word for it on any of these products. Different banks, especially different small local banks, each one's going to be a little different on what they require from you and what they're willing to lend and what their comfortability is. Some banks are very conservative. Some banks are a little more liberal with their lending. So shop around is the key. So I know a lot of people are probably thinking, well, Henry, you got to have great credit to do these kinds of things. And my answer to you is, yeah, you need some good credit, right? It doesn't have to be perfect credit, but you need to be working on your credit. If you're going to use leverage in order to buy property, meaning you're going to use somebody else's money, typically that institution, that person, whoever it is going to want you to have some sort of positive credit history. And so credit is something that you need. And so if you're not in the best credit place right now, that's okay, but you should be trying to work on it and improve it so that you can be preparing yourself to get access to funds so that you can invest and build wealth for your future. Don't just try to decide how you're going to go about fixing your credit. Consider talking to a professional. There are tons of reputable credit repair companies out there, reputable credit repair experts. Find one that you feel like is an honest, upstanding company, and then let them do an evaluation of your credit and then get professional advice on what things you need to fix. And a third strategy people can think about to get access to some funding. I know there are several people who are in a boat where they're renting right now. They don't own their personal home. They don't have any rental property, but they aspire to have some property. Well, you're still in a good position where you can do what we call a rent hack. And I did a whole video on house hacking that you can check out in the link in the description. But you can basically take the house hacking method and apply it to the rental that you're living in. And so, a fancy term for rent hacking when I was younger was just called getting a roommate. Maybe you can bring in a roommate to cover half of your rent, and then you could take that savings, because you were paying all the rent, and you could put that money in a savings account and prepare yourself to invest for the future. Or maybe you can put that towards fixing some of your credit so that you can prepare yourself to get access to lines of credit. So think about rent hacking. That could be getting a roommate. That could be Airbnb-ing a room in your house, picking up a couple of roommates. When I rented my property, I lived in a big property. I had 3 bedrooms and I didn't need them. Well, I had 2 bedrooms and a loft. And so I went ahead and rented out the other bedroom, which covered more than half my rent. If I was as savvy then as I am now, I would have set that money aside to use it to prepare myself to be an investor. I just wasn't that savvy. So if you find yourself in that boat right now, you want to generate some extra income, you may have to get a little bit uncomfortable. And if you're willing to take on a roommate or even Airbnb a room, plenty of people do that. And you can make great money Airbnb-ing a room. I will say, if you're a renter renter and you want to do this, just verify with your landlord that it's something that you can do before you do it. You want to make sure you stay on the up and up. Tons of people have brought in roommates or rented rooms out and they've made a lot of money doing it, and you can do that as a way to save some money and then apply it to either fixing your credit or apply it to buying yourself a property. All right, there you have it. Now you know a few ways that you can get access to some funds so that you can go out and take advantage of the deals that are going to be popping up in this real estate market. I want to give one caveat, and that is when you're going to use leverage, you have to make sure that you are going to use that money to buy a good deal. You have to know that you're going to be able to get your money out of that asset to pay off your line of credit. The last thing you want to do is take out a line of credit on your personal home and then go blow that money on things that aren't going to bring you money in return, or buy a bad deal that you can't pull that money out of, and now you've leveraged the house that you're living in and you're not making money on the asset that you bought. So it is imperative that you get really good at knowing the numbers and knowing you're buying a good deal if you're going to use leverage, or you could put yourself in a very, very tough position. Also, if you're not the kind of person who's good with credit cards, lines of credit probably aren't good for you either, because it's still something that you have to pay back. Now, typically you pay it back by using an asset that generates income to pay it back, but know yourself before you go into just taking out and leveraging and using lines of credit. Know if you're the kind of person who's able to go ahead and use something like credit in a positive manner. Leverage is just a tool, like a credit card is a tool. It can be used to build you a house, or it can be used to hurt you if used improperly. So be very careful when you're looking at using leverage and things like lines of credit. Are there other tools maybe I didn't mention that would be valuable to talk about? If so, leave some comments below. Let's talk about it. I hope you got some great content out of this video. I hope it's going to help you get access to some funding. If you like this video, please like and subscribe to our YouTube channel so that we can keep showing you awesome content like this. And as always, give me a follow on Instagram. I'm at The Henry Washington on Instagram, and I'll see you at the closing table.